Good morning, traders. Good morning, traders. Today we want to talk about a swing trading mistake to avoid. A swing trading mistake to avoid. Are you a swing trader? Do you consider yourself as a medium-term trader? A swing trader is a medium-term trader that want to profit in a financial market for few days or weeks. He or she is not a day trader or a position trader. But there is a swing trading mistake that traders are making. And in this tutorial, I want to help you to know exactly how to avoid trading mistakes. Let's get started. We're going to go to the monthly chart. All right, what we are discussing here is valid for stock, for commodity, for futures, all right, for currencies, all right, for stocks, for any financial instrument, those who are swing trading in a financial market. So you can see here that the price has formed before a double bottom here. There was also this low in this session here. So the zone in the zone of 7640 for the Canadian yen is a support level, because each time the price reaches that zone is finding a support, and here we see a bullish chart pattern confirming to us that that level of 7640 is a support level. Now you can see that the price is retesting this level here, forming is retesting the same level of 7640, that zone. And a common swing trading mistake is to just buy. All right. I'm not saying that it's impossible to buy. If you buy like this, just because the price has reached a support level, it's a speculative buy. Okay. There is a trading activity that we call a speculative buy. All right. So you buy, okay, and you controlling the risk. You know that it's risky, but in fact, it's just a speculation. You want to give it a chance, and you don't mind if you are taken out of the trade, and that will be the end of it, all right? This is what we call a speculative buy, because you know that it's not ready, it's not perfect, and you are just buying. But a lot of swing traders very often will do exactly that over and over. One of the reasons why they are doing it, because they don't know how to swing trade, all right? And they will repeat the same mistake over and over. Today I want to clarify a few things to you that will help you to avoid, that specific, trading mistakes. Prior reaching a key levels or prior reaching a support level, all right? How do you handle that, all right? As I explained to traders in many of our videos, one must always follow the trading drill. You want to find first a trading setup. So in this case, one is thinking that the price reaches, a price was going down, price is looking for a better support level. Now the price has reached, a significant, key level, all right? So you may consider that as a trading setup. Price, reach a key level where it did find a support before. Alright, so what has happened before is likely to take place. So we find a support in that zone, find a support in that zone, find a support in that zone. There will be a high chance that it will find a support in this zone. But it doesn't mean that you just need to buy straight away. All right. So talking about a trading drill to avoid swing trading mistake, one must always follow the trading drill. So if you consider this as a trading setup, which is the first thing that we are looking for, in talking about how to swing trade like a pro, we are looking first for the trading setup. So if you consider this as a trading setup, the next thing is to check the higher time frame. All right, because you're on a monthly chart, you will be a little bit curious. Go to the quarterly chart, yearly chart to see what's happening. And then the third thing that we want to do is the top-down trading method or the multiple time frame trading method. For a swing trader, we cannot, dilute, the top-down trading method, the multiple time frame trading method. We cannot bypass the multiple time frame trading method. It's critical for us that we know exactly how to implement a thorough valid top-down trading method. This allows us to control the risk and also to make excellent swing trading decisions, because we want to time the market correctly. We want to align, the long-term trend with the medium term. Because we are medium-term trader, we must pay attention to the long-term trend. Therefore, it is critical for us as a swing trader, for us that want to swing trade like a professional swing traders, to implement a valid top-down trading method. So here, very often, a lot of traders will just buy. Sometimes it will work, price will go up, people get paid, but sometimes it may not. So we want to get it right all the time. All right? We want to get it right very often. All right, this is good, but there is a way to do it. So now the price here. So price reaches a key level, falling down. It did find the support before. Is a bullish trading setup. Now, the next step, I'm not going to go into every details. I'll go to the most important part that I want trader to understand is the top-down trading method or a multiple time frame trading method. So, if you are wondering what is a multiple time frame trading method, you too search a video about what is a multiple time frame trading method by 24 Stock Trader YouTube channel. So here, because we are a monthly chart, there is a direct link between the monthly chart and a daily chart. So we will now, this is a trading setup, we will wait for a signal. So another thing I need to say to you here, though this is a bullish trading setup, that bullish trading setup is happening when the price is in a declining channel. So if you are just buying like this, it's a risky trade. So that's what I'm saying to you. If you are buying like this, it's a speculative buy because you are violating the market pattern. The market pattern is a bearish channel. So though the price may rally up a bit to retest the top of the consolidation, it's a risky trade. You want to be aware of it. So, but if I want to buy, truly buy for a few days and hold the position, so you buy as a swing trader, you want to remain in the trade for 2 or 3 days or 4 days or more. All right? So you want to be a little bit patient. For the monthly chart, one should go now to the daily chart. So we are looking for a signal. All right, so we change anytime. So you see the red channel that we have drawn on the monthly chart is still here. The price is in a declining channel. As we switch from the monthly chart to the daily chart, we are talking about a swing trading mistake to avoid. All right. So now on the daily chart, what are we looking for? Draw again channel and trend line. So I'm going to draw a trend line. Watch out. I'll show you how I draw it now. You'll see in a minute. So which color should I use for this now? I'm running out of, use green. I think green, you should be able to see green on my chart. Here it is. The green trend line, the green trend line connecting this point and this one here. All right. Are you with me? Are we all together? All right. Here it is. This point and this one here. So we have a bearish trend line. So if we are looking for a signal on a daily chart, a simple way is to allow it to go above that green trend line and to pull back and retest it and to find a support and to see at least one first bullish candle on a daily chart. That will constitute the bullish signal for us on a daily chart. But as the signal is fired, we do not buy straight away. We'll now go to which time frame? The hourly time frame to enter the trade. For the entry, more experienced trader can go from the hourly time frame, drop it down even to the 3-minute time frame at the time when they are about to enter the trade. But I will not complicate the matter today. All I'm saying to you, at least on the daily chart, we want the price to break above that bearish trend line, break above and retest, or break above. Sometimes it will not retest it, but the price will try to form a higher low above, that above the green trend line. So either you're retesting that trend line or the price form a higher low. But the most important thing that we are looking for, we want the price to break above that green trend line and to retest a key support level on a daily chart. So there is a green, you see here, this is support level, price bounce here, went up a bit. So you see the pink line here, it's a support level. And there is also a support in this zone. So when we are saying break above and retest, ask yourself what the price is retesting. So whenever the price is retesting a trend line, which I say 100 times to traders, you want to make sure that the point where the price is retesting a trend line is also corresponding to an horizontal key support level, a key level. So sometimes the price will retest the trend line. People will try to buy there, but the price will go down more to a key horizontal level. So my recommendation is that whenever the price retests the trend line, be sure that the point where the price retests the trend line is also corresponding to an horizontal, okay, a key level. All right, it makes sense. So we will now there is no signal. So those who are buying straight away are buying prematurely. They are buying too early. So this is what we call a speculative buy. It may work, it may not work. It's like a gambling in the financial market. And if you are doing that, you don't want to gamble. Okay? You want to control it. You want to use a minimum risk and know exactly what you are doing. Sometimes professionals do that, but they know exactly what they are doing. All right? It's like in the winter sometime, the lake is frozen, people walk on it, but if you are just walking on it anyhow, you will be surprised, all right? The same thing we do when we are trading, all right? Well, at least breakable. So on a monthly chart, if one is buying too early, one is violating the market pattern, which is the declining channel, all right? It's a contra trend, it's a risky trade, you want to control it. Next, again, on the daily chart, you can see, one more time, I want to show you, you can see the blue line here is the median line, this is a blue trend line, it's the median line of the red channel. So if you are just buying here, it's a resistance level also, because the median line, the price rally up, now it's on the edge of the median line. But if you don't draw all this line, you will not know where is the price, and you just buy here, and it is possible that the price may just continue to go down, continue to go down again, because it's now retesting the edge of the median line of the red channel, and it will just go down, and it will be a losing swing trade, which is not good. We want it to be profitable swing trade. So those are just few things you need to be aware of if you are swing trading. So in this scenario, if I want to swing trade this, I'll be very disciplined. I'll wait patiently, break above, retest from a higher low, checking where is it retesting, is it a key horizontal level, which one, I will prefer it, this one, if it's going to do it properly, all right, in an orderly manner, I'll prefer it to come and retest this trailer here, which is good, all right, or the pink one, or the median line. You see, there was also a consolidation here. You see the consolidation between the pink line and the black line, or one of those. So breakable, retest, so go all the way above the pink line, retest it, or breakable and retest this one here. I'm putting it here, somewhere here. Okay, 8413. 8413 is the median line of this smaller black channel here. See, this is the top of the black channel. This is the median line of the black channel. This is the lower part of the black channel. So breakable, retest either the median line of the channel, or come all the way to 7843, all the way down here, to retest the green line. Oops, I'm moving my lines. Retest it here, and you'll see that that level of 7843 is also a key level when we are talking about another channel in this session here, another smaller channel. Too many lines, my friend, that will allow you to focus more. We are talking about the orange horizontal line here, and this black one here. The median line is the red line at 7843. That will be constituted. Whenever you see a consolidation, be aware of the median line, the top of the consolidation, the lower part of the consolidation, and the median line. So one level 7843, breakable, retest 7843, all right, or breakable, okay, retesting, okay, the pink line or the median line of the pink line, the top of the median line, the pink line at 8782. All right. So the message I'm sending out here is you want it at least to break a ball okay, the bearish trend line, because as long as the price below that bearish trend line is bearish, so there is no signal yet on the daily chart. We need to wait. And when a signal is fired, which means breakable, retest, and one bullish candlestick up a bit, we will now go to the hourly time frame and we will look for similar scenario like this: breakable, retest, turn around on the hourly time frame. We will do exactly what we are doing here on the signal time frame. We'll do exactly the same thing on the daily chart. All right. This is just okay, a swing trading mistake to avoid. Though on the monthly chart, all right, everything looks good. We are at okay, the price retesting a key support level. It may continue to go up, but that is just a speculative buy. So you have to think like how the professional trading, because the professional traders are moving the market up and down. All right, so you want to know how those type of traders are trading. So they do not just trade anyhow, because they are dealing with millions of dollars, millions of pounds, millions of euros, and you can't keep losing money for your firm. It's not professional. All right, it's not professional. So you want to make sure that at the time, so they take time to time their entry. It's like a plane is about to take off. Okay, the runway should be clear, the weather should be nice. Okay, and the air traffic controller should give order that now it's your turn to move. If there's another plane taking off, that plane should go fast before another one may take off. So you see all the time at the airport, all right, a takeoff time. So as a swing trader, you want to make sure you are doing it properly and taking into consideration other things. I don't want the video to be too long. Apart from everything else that I've said, I've been talking about it before, we use also what we call the trading triangle. All right, the market first, the sector before the individual financial instrument. A lot of swing traders are only focusing on the financial instrument. They don't care about the market. They don't care about the sector. They don't care about the market environment. All right. So I say to traders that it's quite challenging for swing traders to swing trade between the 1st and the 8th of each month, and also between the 15th and the 20th of each month. Those are just okay, things you need to know if you want to swing trade like a professional swing trader. You don't want to enter your swing trade on Monday or on Friday. All right, so few things can help your swing trading, and you don't want to keep repeating the same swing trading mistake. So in this particular case, a swing trading mistake to avoid is that when a price, a financial instrument, is going down and it reaches a key support level where the price did find a support before, as it is the case here, it is not an invitation to buy straight away. It is a trading setup. All right, we will now implement a top-down trading method without violating okay the market, without violating the market pattern. So here you can see that the market pattern is a declining channel. Okay, so you know, okay, if I'm buying now, it's a speculative buy. All right, we are still in a declining channel, meaning that the market sentiment is bearish. All right, so a day trader, okay, will consider this as a day trading opportunity. We'll also implement a top-down trading method. So if you go, for instance, to the 2-hour time frame, which is a very good time for day trading, what is the price doing here? All right, you can see that as the price was rallying up, okay, now you see it's on the edge of the median line on the monthly chart. This is the blue trader here, this one here. The median line of that red channel on the monthly chart. So as a day trader, you want to know where are we? What's going on? On the 2-hour time frame, it was in this rising channel, but it's a temporary, okay, bullish trend, okay. So here you want to buy as a day trader. It's a contra trend. You want to buy on the edge of this channel here, but you want to be aware of the resistance level, so you don't buy into a resistance level. Here it is, see, you reach this level, professional know that, you pull back. It's a day trader. You want to day trade this and buy. See, there is a resistance here, all right. So one more time, the blue trailer that we have drawn, okay, on the monthly chart here, we allow it to break above it, all right, for day trading purposes, all right, pull back, retest, turn around, and then we implement a top-down trading method to trade it. This is about a swing trading mistake to avoid. If you have any question or suggestion, put in the comment section, And in due course, I will be busy recording another video to answer your specific question. We are the TSTWSYS008 traders talking about a swing trading mistake to avoid. Happy trading to you all and speak to you soon.